All right, welcome back to MMG and WPC. First of all, this is not financial advice. I'm not your financial advisor. Consult your financial advisor. Stock market, stocks, cryptos, they are all extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over, and I mean that. I will be covering Peter Schiff's deflation versus inflation video because he did answer my question. And then I will go over the FOMC Fed minutes today and the interest rate cut. And then I will dive into the charts on stock market, metals, and Bitcoin. All right, guys. And again, I'm not a licensed financial advisor. This channel is more of an educational channel and learning how to trade. And learning how to trade, a lot of you guys I've noticed, you guys need to learn how to do risk management, position sizing, and diversification. And I guess I need to make a video on that. So, yeah, a lot to cover in today's video. Hopefully it won't be too long, but it probably will be. But this will be jam-packed full of good information. And the next year going forward, because today's rate cut may have been the most important. Also, Bitcoin, it did test 10,000 again. We'll talk about it. All right, so here's Peter Schiff answering my question. And here we go.
Oh, here's a question. This is a $50 question. Somebody paid $50 to ask this question, so I better give a $50 answer here. Got to make sure give people their money's worth. This is MMGinvest. Is a global fiat reserve currency like the SDR a basket of fiat plausible? A special drawing right issued by the IMF, if you don't know what an SDR is, or an SDR fiat basket with gold possible? And how likely is this to happen? Also, with a negative trade deficit, is it possible for a new U.S. gold standard again? Several questions wrapped into one. I guess that's why it's $50. Look, I've never been a big supporter of the SDR. I just don't think the world is going to, rush into the SDR. If there's a loss of confidence in the dollar, I don't think people are suddenly going to place their confidence in the IMF. And it's not backed by gold. The IMF doesn't have enough gold to back their SDRs. Again, I think we are headed back to a gold standard. Gold needs to be the center of the monetary system because it works. What we have now, what we've had since 1971, does not work. That's why the global imbalances are the way they are. That's why we've had all these asset bubbles and booms and busts, and that's why we're on the precipice of this massive economic collapse, because we have not had sound money. We've had this fiat money. But I do believe that a lot of central bankers can read the writing on the wall. Central banks are buying gold. They have a lot more to buy because they only own about 25% of the gold, and they need to own more. Investors don't own enough gold, and people are going to buy gold. And gold is going to be remonetized. We will be back on a gold standard. There is going to be no fiat currency that's going to replace the dollar. See, a lot of people make the mistake of thinking, well, the dollar is going to be the reserve currency indefinitely because there's nothing to take its place. The euro's not ready. The yen's not ready. I agree. But gold has always been ready. Gold was the center of the monetary system before it became the dollar. And in fact, the only reason the dollar became that reserve currency with Bretton Woods was because America owned all the gold. And because we promised to pay gold to bearers of our notes, Federal Reserve notes, dollars on demand.
All right, right. So, yeah, you better answer my question, Peter. $50. I also bought his father's books, more of his father's books. Great man. Rest in peace. Anyways, so he answered my question. Now, here's the thing with the SDR. The IMF does want to do, they've had the SDR, special drawing rights. It's a basket of fiat currencies. But can't you technically still have a basket of fiat currencies for some sort of global monetary reserve currency? Because if just one major country goes to a gold standard, all major economies and currencies and their countries have to go to a gold standard. Because if they don't, their currencies are going to just, bottom will just drop out, right? So I was just wondering if they could get away with that. Here's the thing, when you ask them questions through a comment, through the comment section there, or super chat, you could only put in so many characters. And, I tend to agree with him. I don't think the world's going to trust IMF. Why would they? I mean, preferably they're, globalists or whatever. But also, when the financial system does start deteriorating and the U.S. dollar loses its reserve status, I think that there's going to be much more competition, economic warfare. So countries might not want an SDR. So it doesn't matter. Either way, central banks are buying gold. So I do agree with him on that. You guys should also watch his video. It's like 3 hours long. Every time I listen to Peter, I learn something. I mean, he is probably... No, I mean, he most likely... Well, he should, in my opinion, go down as one of the best, economists or financial economists of our time. He is going to go down as a legend. And it's another reason why I'm getting his books, and he provides you a signature on the book as well. He signs them. So, Peter's name's going to probably live on for the rest of our lives and in history because he's been calling it. And he might be really, really early, as he was with the housing bubble, but he always calls it right. It's just that, manipulation and human psychology, it always could outrun fundamentals and logic. Because markets are irrational, in my opinion, as well. All right, so let's go into the FOMC Fed minutes here. So there was really only two questions I thought worth mentioning and looking at, and they made Jerome Powell pretty uneasy. You'll see.
That's what we're doing, and that's why we're doing it. We never take into account political considerations. There's no place in our discussions for that. We also don't conduct monetary policy in order to prove our independence. We conduct monetary policy in order to move as close as possible to our statutory goals, and that's what we're always going to do. We're always going to use our tools that way, and then at the end, we'll live with the results. In terms of the balance sheet, that was really just a matter of simplicity and consistency. Really nothing more to it than that.
Greg, Rob.
Thank you, Chairman Powell. Greg Robb from MarketWatch. I was wondering, we weren't in the room, but I think it's a fair assumption to know that the two dissenters probably spoke about financial stability concerns. So I was wondering if you could talk about what was your response to them when those concerns were raised. I've collected a couple of things from the IMF and the Bank of International Settlements, said that it's just when you have low rates, you just get more debt in the economy, and that this is also this feeling that it makes it harder to raise rates. So could you talk about that? Thank you.
Yeah, so first let me say, I'll just speak for myself, but I understand those concerns very well. I do. I've studied them. I've spoken about them, and I take them very seriously. But as I look at today's situation, I don't see them as a reason not to take this action today. I just don't think that would be my point. And one of the reasons why I think that is if you look. So we have a financial stability framework now for the first time. Before the crisis, we didn't have this, but now we have it and we publish it, and we look at really four big things, so that we know we can, the public can hold us accountable and compare us meeting to meeting and see whether we got this right. So this is transparent now. But the four things we look at are valuation pressures, And we do see notable valuation pressures in some markets, but honestly, not at a highly troubling level. In terms of household borrowing, household and business borrowing is the second thing. Households are in a very good shape overall. I'll come back to business borrowing. Leverage in the financial system is low and funding risk is low. So overall, staff's view has been, and my view has been, that if you look overall, financial stability vulnerabilities are moderate. The place that gets all the attention right now, a lot of attention, is business borrowing. And we look very carefully at that. What's happened with business borrowing is the loans have moved off the balance sheets of the banks and into market-based vehicles, which tend to be stably funded.
All right. So one, he said housing is very strong, not an issue. Actually, an article came out today prior to the meeting, and housing is not that strong, not that stable. Buyers are drying up, and obviously, if interest rates keep going higher, borrowers, home mortgage lenders, and borrowers, the interest rate goes up on the debt, and the borrowers start defaulting, like in 2008, 2009, right? The business debt. So for corporations, right? Corporate buybacks have been insane. I mean, they're not even meant to. They're not supposed to be really doing this, where instead of taking a company's extra cash or debt and converting it into assets to expand the business, they're taking it and just buying their own stocks, putting in floors to their stock price and making the stock go higher and higher. And then later they plan on selling stocks at higher prices to fund future operations, right? But businesses are lately, I think it's a horrible plan to keep buying your own stocks, because if the market dumps, your company is in some serious trouble. And it's pretty much what I just want to talk about for that. Let's listen to a little more here.
But nonetheless, it's clear that a highly leveraged business sector could act as an amplifier to a downturn. So we're watching that very carefully. But I think if you look overall at the U.S. Financial system, what you see is a high level of resilience, much higher than it was before the crisis. And that's something to take comfort from. And I think all of that gives us the ability.
All right, so he's rationalizing the rate cut, right? And the winding down of the balance sheet. Because you guys have to remember, the narrative is that the economy's booming, it's the strongest it's ever been, stocks are hitting record all-time highs, and so why would you just start cutting rates? Because you always raise rates during an expansion period of the economy and a strong bull market cycle, right? But we're a decade into it. It's the longest one running ever. And now they're already starting to cut rates, but they never normalize rates. They never brought them up to normal levels to rein in all the debt that's out there. Because you have to rein in all the debt. If you don't, the debt's going to destroy the economy, and that's the long-term problem. So he's justifying it basically by saying the only thing he's worried about is corporate buybacks and global slowdown, except for the United States. And of course the tariff wars. And that's the only reason he's doing it, which is not true. The reason he is doing it is because the stock market is forcing him to cut rates. Because if he's not cutting rates, and the market didn't anticipate him cutting rates for the past few months, the stock market wouldn't be at all-time highs. It would be crashing. It would have kept on crashing if we look at the charts from earlier this year. That's the only reason why he's cutting rates. It's the tail wagging the dog, right? Stock market is forcing the Fed to do this. He just can't admit that because it's not supposed to be that way. because the only thing they're supposed to be doing is making sure that we don't have runaway inflation. We have price stability and job growth, whatever. Although it's been proven that they're the ones who are destroying that in the long run. So yeah, let's go to our second question that I thought was great. Just give me a second.
You would do that if you saw real economic weakness and you thought that the federal funds rate needed to be cut a lot. That's not what we're seeing. That's not what we're seeing. What we're seeing is that it's appropriate to adjust policy to a somewhat more accommodative stance over time, and that's how we're looking at it. What I said was it's not a long cutting cycle. In other words, referring to what we do when there's a recession or a very severe downturn. That's really what I was ruling out. I think if you look back at other mid-cycle adjustments, you'll see, I don't know that they'll be in the end comparable or not, but you'll see examples of these.
It's Don Lee with the LA Times. You mentioned the difficulty of assessing trade tensions in the economic outlook. And could you say how much of a factor the U.S.-China trade?
All right, so another thing today, when he started talking halfway through it, the market started realizing that he kept saying mid-cycle adjustment. What that means is mid-cycle adjustment, that this isn't going to be a new trend of just cutting rates all the way back down to zero, which would be, I mean, what does it really matter? Because the rates right now are at 2.25% on the low bond yields, right? So if he were to make this a cycle, that's what the stock market wants, and he were to cut rates all the way to zero, he'd only have 9 rate cuts if he only did them 25 basis points every Fed meeting, right? Or every other Fed meeting. Although it would go much quicker than that, because it doesn't make that much of a difference. So what he's saying is it's a mid-cycle rate cut, meaning he's cutting rates now, but then he's going to go back to raising rates. And that's why the stock market dropped like 400 points today. So what does that tell you? That tells you that the stock market without the Fed and low interest rates, it's not going to keep going higher. Well, why is that? Because the stock market's not that stupid. They know that they need the Fed, and they know that they need lower interest rates, or QE. And by the way, low interest rates and reducing the balance sheet, that just starts pumping money back into the system. And the market's not that stupid, guys. They know that the Fed needs to cut rates for the stock market to keep going higher. And if they don't, where's the money going to come from? Well, maybe the Fed thinks. So here's the thing. The Fed, they're saying one thing, but they believe another thing behind closed doors, right? They think that, and so does Trump, they think that capital flight from other countries is going to fly into the United States and the U.S. capital markets. And that's what's going to keep this market, this bubble going. Well, also Trump knows that rates do need to get cut as well. There is an election season coming up. So that's why the market dumped today.
When we have our next recession, the Fed will have less room. It will happen. The Fed will have less room to maneuver cutting interest rates since you're cutting now. How big of a problem will that be?
You know, the premise is not. I'll question your premise for a second. If you remember, whether again, one of the purposes of our cut today is to support the expansion, and we don't know when, and if it really works, if that works very well and the economy gets going again, you know, you don't know where the funds in other cycles, and I don't know whether this will happen or not, but in other cycles, the Fed wound up raising rates again after a mid-cycle adjustment. Again, I'm not predicting that, but I don't think that we know that we'll have less ammo because of these things. That's one thing.
Oh, he definitely got caught on that question. That was great. So she asked the best question, right? You're not going to have any ammunition. What does that mean? Well, if there's a recession like now or soon or in the next few months or even next year, they can't lower interest rates all that much because they're already starting to lower them again. And interest rates aren't even at normal levels. They're still way, way below them. So what that means is they don't have much room to cut rates to help the economy or to get loans moving again, to get the economy juiced and moved again, right? Because if there aren't loans being made, and that means that businesses aren't being created, and interest rates, you could only take them down to 0 from 2.25. That's not enough ammunition to fight off a recession. And that's what she's asking. And then he's like mumbling and doesn't know exactly how to answer that because she's right. And at first he said, well, we don't know if there's going to be a recession. And yeah, exactly. But there could be, right? And then he just said right after that, well, we need to get the economy going again. So, and that's an admission right there that the economy is kind of stalling out right now, meaning there is possibly a recession coming, because why else would you be cutting rates if there wasn't? So this is like the perfect question where people that are in la la land still might actually realize that the Fed is stuck. It's stuck in a box. It's cornered. And they're only, okay, so they could cut rates if we fall into a recession, but it's not going to do anything because it's not enough. Going from 2.25 to 0 isn't going to stop the markets from selling off and going into a it's not even going to be a recession. It's going to be a depression. So then the only thing he's going to have left is to print money. And the next time they print money, it's going to be enormous. It has to be double, triple the size of the last time to reinflate the bubble that they've created from the last recession.
So
You won't be able to cut as much if rates are low. I mean, you will have less ammo in that sense.
well, but you're assuming that we would never raise rates again, that once we've cut these rates, they can never go back up again. As a matter of principle, I don't think that's right. In other long cycles, long.
All right, see, so he just said, yeah, assuming that we don't start raising rates again later on. The funny thing is, the market sold off today because he said that. So that means they can't raise rates anymore. So he's bluffing. It's like playing poker. He's bluffing. And the only reason he's doing that is to keep the confidence going. And what's a confidence game? It's a con game, right? It's a Ponzi scheme. So there you go. That was the best question. That's why he started mumbling and stuttering and
Long U.S. business cycles have sometimes involved this kind of event where the Fed will stop hiking, in fact, will cut, and then we'll go back to hiking. Again, I don't know whether that'll happen here. It doesn't seem like something that's in particularly likely, frankly, but we don't know that. And the other thing is, I think.
What did that mean? He just pretty much said, well, we don't know, nothing's likely, we're not planning on that, but you are, but you're not. He just talked in circles.
by extending the cycle, you do have a lot of benefits from that. And I think we will use the tools that we have. A couple of rate hikes one way or the other isn't going to matter so much. If there is a downturn, you're right, there will eventually be one. We'll use all of our tools aggressively as we need to when that time comes.
And boom, right there. We'll use our tools from their toolbox. Their tools. What's their tools? They only have two tools. Interest rate manipulation. Hiking rates, lowering rates on the lending rates, right, for loans. And QE, printing money. And he just admitted, we'll use our tools aggressively as necessary, meaning when the economy, so if we go into a recession next 12 months, which we probably will, they're going to print money. They're going to first cut rates, and that's not going to be enough. And then they're going to print money, like helicopter money. I don't know, maybe the Treasury will cut everyone a check in the United States. I don't know. But we're definitely going to get inflation. Ironically, the dollar's moving up. And currently. And I said that was going to happen. I said the dollar was going to move up, and so will metals at the same time. And that is exactly what's happening. So let's get into the charts. All right, guys. All right, here's the housing data. And he said during the conference housing looks fine. No, it doesn't. Prices have already started to come down. New home builders has been falling lately. Also, demographic shifts. The boomers, they're going to start selling homes. Right now, younger generations can't even afford them. I will post this in the free room so you guys could read it. Now, here's a great post. So, recent Fed easing cycles. Fed cuts 50 basis points in January 2001. We get in recession begins 2 months later. Fed cuts 50 basis points in September 2007. Recession begins 3 months later. And that is true. So they do see something that we don't, right? Or, well, I see it, but I'm talking about, the markets in general, or everyone else out there, the sheeps. And this rate cut, it's the first one in 11 years. Is that right? I just read that somewhere. Here we go. Trump slams Fed after market meltdown. As usual, Powell let us down. Did he tweet that? Powell pivot complete. Fed cuts rates for first time in 11 years. Faces 2 dissents. Yep, there you go. All right, so let's take a look at the stock market. So here's the S&P weekly chart. Had a nice drop today. We were on an 8 count anyway, so a pullback was going to happen anyways on the weekly time frame. Oscillators, possibly more downside for the rest of this week, I believe. Let's take a look at the smaller time frame for the S&P. $29.40, there's around there, around 2,900. There's support on the S&P 500. Now, I don't think the markets are going to start crashing or anything. I still think the melt up is still going to happen. They're going to come out tomorrow or next week and say something else that's very dovish to get the markets back up. That's what I think. That's what they're going to try to do. Let's take a look at the Russell 2000. If this would load. I have 1,000 tabs open. So on the weekly chart, Russell looks pretty good. It's actually breaking up higher today. Let's go to a 1 day. Yeah, the Russell's going higher. Russell 2000 is a better, I guess, indicator or index you would look at to see if the stock market's going to go higher, in my opinion, because it's 2,000 mid-sized companies, right? And that's actually breaking up higher while the S&P's falling lower. So I consider, I think this is going to be a dip or a pullback, and the stock market's probably just going to keep going higher for weeks and months to come. Here's the NASDAQ, or no, this is the FANG stocks. FANGs look strong as well. All right, what else? I'll talk about bonds in another video because that's like it's a whole different beast. This is what's very interesting to me. The dollar, right? So the dollar, there is a cup and handle, so it should be breaking up higher anyways due to technicals. But if you zoom out, look at this. Here's a weekly chart of the dollar. So if the dollar actually gets up to the 104 handle, we'll have a giant cup and handle on the weekly. Now, we're still very far away from 104. I mean, extremely far away. But remember, the dollar is weighted against other fiat currencies around the world. So it is very plausible for the dollar to keep strengthening against other fiat currencies. I mean, there's some serious troubles in Europe and also in Asia. So, although if the Fed didn't cut rates this soon, or capitulate this soon, and they kept raising rates a little more, that actually would have been, in my opinion, really good on the economic warfare front, like the US versus the world at this point, and emerging markets, because all the debt that the rest of the world borrowed from the US in dollar terms would have been, could have started defaulting, right? And then you would just see massive capital flight into the US, and I think that's what their goal is. The problem is that the US stock market can't handle any more rate hikes. Neither can the US economy. So now it's like, I mean, this dynamic is very fragile. But I still think the dollar could go a little higher here. At least hit the 100 handle. And at that point, it's really, there's just a giant cup and handle. And yeah, I would not be surprised if the dollar gets much stronger. And that takes me into the milkshake theory. The problem with the milkshake theory is they're cutting rates. The milkshake theory only works if they keep raising rates. The Fed does. And I'll make a separate video on the milkshake theory. Someone also asked Peter Schiff about that, and Peter Schiff, I don't remember what he said about it, but he said that won't work out. So I have to revisit that, listen to what he says, and then revisit the milkshake theory guy, and then I'm going to give you guys my theory on the milkshake theory. All right. So I don't care if the dollar is going higher. Gold, I still think, is going to go higher. Although it did get slammed today. So let me find the gold chart that I want to look at. So give me a second here. All right, here's a weekly chart of gold zoomed out. So if you guys remember, I predicted this huge rally in gold in the past few months, right? I predicted that with my simple TA here. And that was with my blue line, my equilibrium line here. And when the 200-week moving average crosses my blue equilibrium line, that's very, very bullish. And I predicted it with the 3-day chart, to be honest. But looking at the weekly chart now, so here it is, the 200-week moving average crossing above my equilibrium line, and then boom, that happened in 2003. The NASDAQ bubble popped, and we had a recession back then. It was a mild recession, and a decade-long bull market, right, in gold and silver and the mining stocks. So here's today, right? And the 200-week moving average just crossed above my blue line in the past few weeks, past like 3 weeks. And also the price just shot up like a rocket on gold, right? Although we've had a lot of mining stocks that in the past like 4 months have gone up hundreds of %. Actually, a lot of them have. You just had to have bought like a month ago, not even a month ago, like a couple months ago. And I was warning you guys, beginning of this year, we need to buy mining stocks. Most of them are up over 100%. All right, so if you bought then, I mean, if you bought like a few weeks ago, yeah, you got hit pretty hard. And some of them have not rallied yet. They will eventually. All right. And that's my opinion. I could be completely wrong. So, there was a 9 sell on the weekly here, but the price is trading above that 9 sell. So, I expect higher prices. There's major support at 1300. Will we go back to 1300? I hope not. Well, actually, I do hope so, because I'll load back up. Well, I won't load back up. I'll just keep buying that. I'll buy that dip. I'll sell things if I have to. But I think that we have some extremely strong support at 1414, all right, or at 1400, around that area, give or take $10. So let's go to a 3-day chart real quick. See what we see there. Either way I look at it, look guys, I mean, this is like, it's a bullish pennant, but look at this. If you just draw a triangle, it's an ascending triangle. So TA wise, this is going to break out. See that? It's an ascending triangle. It's going to break out and above it. And it gives you like a 70% probability, something like that, with an ascending triangle. Let's go to a daily. Or hold on, let me click on the oscillators. So the 3-day, yes, it is overextended with the oscillators. Let's go back to the weekly, see what the oscillators look like. Oscillators overextended on the weekly as well. But you know, oscillators aren't the best for TA. They really are not. Let's take a look at the daily for the intermediate time frame, right? So the daily, you would look for the next like few weeks to month or two price action. Oscillators on the daily, well, RSI, it's neutral, and the MACD looks like it's going to cross back up to the upside. And that's another reason why I think the price will go higher, and this was a knee-jerk reaction with the sell-off today in gold. I think the sell-off was due to because the dollar rallied today, and people are thinking, and people, listen, you need to realize, gold just got out of a like 8-year bear market. So speculators are still very skeptical of the beginning of a bull market in gold and precious metals, right? So they're going to take profits, especially if something's been running up for quite some time now. And this happens all the time with FOMC meetings. Gold will sell off either right before it or right after, and then smart money will buy it up. There's no reason to sell, in my opinion, because, I mean, they're all printing now. They're all doing monetary easing and cutting rates, right? It's just common sense. I mean, that's what I think. So, so the daily looks slightly bullish. 12-hour. Now, I will get concerned that this will be a larger pullback. If we break down and below 1400 and out of this ascending triangle, then I'm going to take a loss on my position I'm holding right now, leverage ETF, and it is what it is. I could also when you trade leverage ETFs, for one, do not do it if you're not experienced. Two, you could hedge your bet, right, with an inverse ETF, and I will do that then. But I'm still looking to buy more, actually. Let's go to a 4-hour on gold. So maybe a little more downside for tomorrow, maybe the rest of this week, but I think it's going to stay within this ascending triangle and then break out to the upside. We'll see. I'll make another video Friday probably. Okay, what else to look at? I mean, that's pretty much it for gold. Here's silver on the right. Silver, you know, it's a shame because the 4-hourly, it had a nice ascending triangle here. Bullish pennant, and then it just broke down out of it. But gold is still hanging on there. So, but listen, guys, I mean, silver has been rallying, and once this sucker breaks out and hits 17 bucks, I don't think the bankers could stop it, the bull market. So, you have to know that metals are extremely volatile because there is manipulation, and the bankers, it's in their best interest to keep it as low as humanly possible. Even governments, right? Because if metals break out to a bull market, that really signals to the market that there's something wrong, and then the market actually might sell off due to that. So know that when you invest in mining stocks and precious metals, you're in it for the long haul. You're in it for the long term. It's not for the next few months. It's not for, you know, it's an insurance policy that might end up turning into a bubble, and that insurance policy might, you know, you might see some massive gains, right? I mean, we already have seen gains in the past 4 months, but you've seen nothing yet. This is just the beginning. The party hasn't started. We're just setting up chairs, tables, and the stage, right? All right, let's go into Bitcoin. So in my last Bitcoin video, I said that the price was still going to rebound and go back up to 10,000 and test it. That's exactly what just happened, right? So, yeah, I mean, we're testing 10,000 right now. I think we're going to break above 10,000, and we'll see if 10,200 will hold it back. But if we go to the daily chart on Bitcoin, I had a 9 buy signal. I posted this in the private members area, and it's breaking out. It's breaking out and it's rebounding, right? So we're gonna see if it could break above 10,200. Next resistance will be 10,600 and then 11,000. I think it's gonna have a real hard time getting above or even getting to 11,000. And that's where I think this rally will fail. Now, am I certain of that? No, I'm not. Right now I'm long because I covered my short, so I'm just long Bitcoin. I might actually put a little bit of leverage on there, nothing much at all. And I'm going to see how high this is going to rally back up and rebound. There's also a lot of resistance at 11,800. So huge resistance. Also, let me put on the fibs here on this daily. So, yeah. 10,200 is next resistance area. It's likely to break above that. Then 10,600 is the next resistance, major resistance area. And then it becomes very difficult. And above 11,000, maybe 11,200, but at that point, it's running into some serious resistance, and it might not break above that. That might be your shorting. That's where you might want to start shorting if it gets up there. Even 10,600. I don't really know, guys. I'm just gonna play it as it happens. 50% fib retracement is at 11,130. The next major resistance area is up again around 11,800, 700 area. And we'll see how high this goes. I'm going to wait and see how high it goes. I want to see how the price reacts. If we start seeing some huge selling pressure and huge, some sort of reversal candle, then I'm going to look to short this sucker again. I don't think Bitcoin's going to I don't think it's going to take out these previous highs. I really don't think it's going to take out at 13,000. So I'm going to be looking to short around up here if it gets up to here. I don't know how high it's going to go. But I'm going to start looking to short it again in the coming days. And next week probably. But right now I'm just holding long. Some of the alts, they look like possible good buying opportunities for a swing trade to hold for a few days as well. And I post that in the private group. But yeah, RSI extremely oversold on the daily. MACD is about to cross to the upside on the daily for Bitcoin. And all the oscillators have been oversold for quite some time. So I do expect a decent upside rally here. I just don't know how high it's going to go. I have a feeling it's going to fail around 11,800. I don't know for sure though. All right, guys. So you let the market tell you what it's going to do, and then you are reactionary to the market. Okay? Yeah, I think that'll cover it for now. Smash some likes. Leave anything in the comment section. I will answer your comments, and please share my videos. It's the only way my channel grows. And yeah, till next time. And check out the free chat groups. Links are below this in the description section. Also, go to MMGinvest for the research on mining stocks and stuff.